That study highlighted some other specific investor needs, and one that you've mentioned earlier on there. There's quite a large cohort of high net worth and self-managed super fund trustees moving into the pre-retirement phase. As you mentioned, they need a lot more planning, and they pay a lot more attention because it becomes a lot more important to them at the time. But at the other end of the scale, there were some interesting findings. So the study identified a rise in what we call next generation investors. Now that's the 18 to 25-year-old bracket. Dante, how can these investors get access to affordable and quality advice?
Yeah, great point. And this is a group that we really want to engage with because they're the next generation of Australians who we want to make sure they are financially literate first and foremost. They can, they sort of create these financial smarts because they don't have, the experience, if you like, the life experience yet. But it'd be great to sort of put them in a position where they have sort of the base core skills to identify and do and take action at this point in time that will set them up for the future. They are also the generation they're going to inherit and be part of a large inheritance from the boomer generation in terms of massive amounts of wealth and asset transfers that's going to be taking place over the next couple of decades. And so therefore we really want them to make sure that they they look after those assets and they look after it for their own benefit as well, but of course to ensure that they can maximize their opportunities that they may be coming into. But one of the key things for us though, of course, is that they're not traditional in terms of the way they approach things, especially the Gen Xers and the baby boomers. This group are definitely very different in the way they want to interact. They they have less loyalty. They're unlikely to stick to one type of planner. They're very much likely to shop around, want true value for money. They want agility. And they probably also want to be able to have a lot more control of what they do on their own. And so therefore this role of technology for us plays a big important part here because one, it can give them a great introduction to their financial position, to finance, to the financial services system. It can self-empower them in terms of giving them the tools to assess and to compare and to perhaps do some things on their own and to build up the confidence. And it is a way in which you can engage without the full and without being sort of really full on, if you like, with a need to do a full comprehensive financial analysis of their situation and a financial plan that they're not going to engage in or be interested in, to solve their problem of the time or the problem at the moment now, and so for it to be a positive experience. So they're a very important future consumer and client group. The engagement with them has to be very different. I know for an example, Oren, that some of our members, to try and engage with this group, are really looking at not only utilizing technology, but doing sort of like education seminars with this group. Trying to empower back to them. So rather than making them feel like they've been told what to do, but rather empowering them to make those decisions on their own and to be able to do it themselves, at least give that a shot. Some of those people will go on and continue to be DIYs, if you like. Some of them will then eventually get to a point where they will seek advice and support and help. But we also have to solve one more element, and that is making the price point right too. And I think that's probably our biggest challenge. I know that many are looking at different models to cater for this group. And I'll give you an example. Some are looking at subscription models where basically this group will subscribe to certain services and effectively they can turn it off, any given month. So, very much like the Netflix model is being looked at as a way to try to engage with this group for the period that they need it for, and they can turn it off and then turn it back on whenever they need it. And not every financial planner or financial planning business is able to do something like that. But there's definitely a generation of planners that are looking at that and better interacting with that age group and looking at different ways, thinking outside the box in terms of the way they can engage with them.
Yeah, great. And look, I think what I'm really hearing echoing through there is a requirement for a change of business models, which I think can help all these scenarios too.